What's up, YouTube? Welcome back, folks. We're back again today, and we're back again with another live video. And today, we're jumping in the market, and we're back with another live, and we're gonna see what's going on in the market because it's been a crazy day today. It's been a crazy day in the market, so we're about to get it popping, guys. I hope everyone is fine, and let's jump right into it. All right. So today, we're going to be looking at some news and we're going to be looking to see what's driving the market so red right now. And I'm going to be giving my opinion on what I think is making this happen right now. Based on the information we also got from Jay Powell and the Federal Reserve yesterday. So we're going to hop right into it. We're going to hop right into some news right away. And we're about to get it cracking and we're about to break down this movement and this reaction that we see happening today. So let's get it popping. So boom, my opinion right now is basically based on the information that I see and things I put together to give me this conclusion. It's basically what's happening in Europe and in China is going to be a massive impact on what is going to happen in the US market as well. Um, if Europe crumble and if China continue to crumble on because of the COVID restriction that they have implemented, and that might be a factor to drive recession in their economy if things does not get better on that side. Also in Europe, based on what's happening between Russia and Ukraine and the war, based on what's happening with Vladimir Putin and all the sanctions and all of that stuff that's happening against him and Russia, that's gonna impact Europe based on like gas, electricity, wheat, stuff like that. You know what I mean? Commodities, energies, those type of things are gonna have impact. Oil as well. We already see the impact oil price already have on the economy and how it's affecting our everyday life and our everyday living. So, so by this article, we're checking out this article on investing.com. Germany stocks mix at close of trade. DAX is down 0.49%. So let's check this out real quick and see what we can dissect from what's happening in Germany and what's happening in Europe. Uh, German stocks were mixed after the close on Thursday as gains in the food and beverage. Oh, come on. Give me one sec. Food and beverage, software, and industrials sectors led shares higher while losses in retail, constructions, and consumer cyclical sectors led shares lower. At the close in Frankfurt, the DAX fell 0.49% while MDAX index lost 1%, and the Tech DAX index gained 0.37%. The best performers of the session get into the get into the get in let's get into some news, bro. We don't want to see that. So you got nothing for us right there. Okay. That's basically giving us information about the sectors that are up and down. All right, so there was also a huge news as well, and some huge data that happened early this morning, where the Bank of England raised their interest rate. We're gonna take a look at that as well. That's definitely showing you guys that Europe what's going on in Europe is really bad right now. France as well. France stocks lower at close of trade. So if Europe continues to crumble, it's definitely going to affect what's happening in the U.S. market as well, as what the Federal Reserve Chairman Jay Powell stated yesterday. He said yesterday that it will affect us as well. So we see that it's happening in Europe, the recession. Things are going bad, things are looking gloomy. Interest rates are getting higher to crazy levels never seen in a long time. So I hope everyone is just looking and paying attention to what's going on. So this is good for the long-term investors, and this is also good for the day traders, and also risky as well if you don't know what you're doing. Okay, this is a lot of volatility and a lot of move, a lot of ups and downs, a lot of fake out, a lot of false move just to wither you out in the market. That's what the algorithms and that's what the banks and the big institutions try to do. So they already see what's going on. Remember, they're the so-called expert. So they know what's happening, guys, and we should also know what's happening as well. We should definitely be looking at everything that we see in the market. It's crazy what's also happening in Brazil as well. So let's hit the calendar and let's look at what the Bank of England interest rate decision had to do with the move in the market today. Give me 1 second. Hope everyone out there is doing good. Hope you folks are all right. Just smash the like button up on the video. Subscribe to the channel if you enjoy the content. So let's hit the econ calendar real quick and see what we got. So remember yesterday what we talked about Federal Reserve and why it was very important. So we see that Powell did save the market, but it only lasted for a little bit. We were at the same levels pre-Powell yesterday. So yep, that's what it is. So let's find the Bank of England interest rate real quick. Okay. So we're gonna see what's happening in Europe, and we're gonna see what. All right. So the Bank of England, they met the expectations for interest rate decisions. And look at this, guys. Look at this chart. The interest rate level is higher than 2019, 2020. Okay? Let that sink in. Interest rate in the Bank of England is higher right now in 2022 than it was in 2019 and 2020. Okay? Let's go to the max chart. So this is the max chart. So right now, it is ticking up. Right, let's hit 5 years. So it's at the highest level it's been in 5 years and more. We don't want to see levels of 08 and 09. It might hit 2.5%. It might hit that level. if things continue to regress in Europe, and if things continue to get bad in Europe, we're definitely going to see a 2.5% interest rate in Europe, and that's definitely going to impact everyday life. That's going to impact everything in the economy, and it's going to be felt by the individuals. So I think that's a factor that's going to help to bring the stocks down, and that's going to help to bring the recession into place. That's why I think we will get a recession sooner than what most people think. Okay, so that's just my perspective. And if things continue to get worse in Europe, it's definitely going to happen. So if just give me your opinion, guys. Let me know what you think. You agree with me or you disagree? What do you think of everything that's happening in the market? What's your intake on it? Just let me know. Comment down below and give your opinion. So now we're going to jumping into the charts. We're going to be taking a look at some of our stocks. Let's see how some of our big name stocks reacted today. Let's just search it up real quick just to make it faster. Let's take a look at Apple. Okay, so today Apple shit all the way. It is currently trading at a nice support level on Apple right now, and that's after yesterday, and that's after Jay Powell and what he had said and all of that. So we're still not in a bad position on these levels on the charts. Seeing we touch these levels quite sometimes over the last 8-9 months. We have definitely touched some of these levels over those time periods, say about the last 6 to 7 months. Yeah, about that time frame, like about 6 to 8 to 9 months. We have been touching these levels, and we have been doing pretty good. Once we hit these levels, we have definitely recovered on numerous occasions. So I want to see if it's gonna continue to hold, and let's see how let's see how we're looking on the weekly. We're not looking bad on the weekly on Apple. We're still in a good position, even though we're down today significantly. We're down what 5%, down 5%. So that's not bad. If you're looking at the charts, or if you're seeing what I'm seeing, that's not bad. Even though you're down 5%, if you're a long termer, you could definitely add a little bit to this position, because it seems as if it's a nice, comfortable spot that everyone is buying up based on what we see the reaction of some other stocks when it's compared to Apple. So if you're a long termer and you got the long term vision, you should definitely be dipping a little bit at these levels, but not all in, just dip a little bit, and you should be fine. Let's look at BTC. BTC also got rejected as well. God damn, BTC is down 8%. Yeah, but BTC is still in a nice level as well. So yeah, it's not looking bad on BTC right now. A lot of people say, oh, BTC was going to be hitting 20,000, 25K. Still trading at a nice level. Ethereum as well. Let's see what Ethereum is doing. Ethereum is doing pretty okay too. So Ethereum is not looking bad. Let's look at Tesla real quick, guys, and see how Tesla is doing today. We all see what Elon we all see what Elon is doing. Why is it? Oh shit, that's the wrong thing. All right. So this is on the weekly, guys. Tesla is looking pretty comfortable in this region from like 700 to 1200. That's the nice region on the weekly for Tesla. And it is holding up pretty good. Tesla is not a bad stock to be in. It's going to give you a lot of big moves. If you trade it, if you're a long termer, regardless of which way you go, it's going to give you moves. Okay? Let's see what bonds did today. TOT. Let's see how bonds reacted today. Whew. Bonds are down. Stocks are down. Bonds break a major support. It did. Yep. It break that major support level. Yep. Bonds got hit. Hey, let's see if Bond's gonna hit 100. Let's see. Let's see if TOT is gonna hit 100. It's on the daily and is looking ugly right now. But hey, let's see if TOT is gonna continue to shit all the way down to 100. Because if it does, I'm telling you, it's gonna be looking ugly in the market for everybody. It's not gonna be looking pretty. Facebook. Facebook was okay today. Facebook popped. No, that's not Facebook. Oh no, that's Facebook's cousin. Yeah, this is Facebook. It seems like Facebook was okay today. It wasn't that bad on Facebook. Okay, Facebook wasn't bad today. Yeah. Let's look at the S&P 500. S&P 500 took a nosedive as well. So everything is going down. Everything was down today. Let's see what happened tomorrow. And just let's get ready for another day again, another ride, another hustle again. Let's see what the market is gonna show us. And let's see if we get any crazy news. Just let's see. You know what I mean? We just have to take it day by day. Roblox. Roblox was alright. What? After hours, it recovered. Roblox got hit today too. It wasn't that bad though. See what the dollar is doing. Okay. So the dollar went up today. Yep. After getting hit yesterday, the dollar recovered a little bit today. went all the way to 102 and recovered all the way to almost 104. So the dollar recovered today right now. And let's see if the bullish momentum for the dollar is going to continue. I guess we're going to see stocks fall if the dollar continue to rise as well, and everything is correlating. And see, they bought the dip on the dollar today, but let's see if that dip is gonna last. Disney, Disney got hit. So basically, everything it was a red day today, basically. So let's look at Europe real quick. Let's look at the global market and see. See, everything was red today, guys. We only had one, two, three, four, five green, and one, two, three, four, five, six, seven, eight, nine, and nine red. So that shows you the global state of the market. And currencies got hit as well today. A lot of currencies were down 2%, 1%. And when you see those move, those are big moves in the currency market as well. So we clearly see that we're getting a lot of red in the market. Besides, we had a nice green day yesterday. That's just how the market is. So time in the market is better than trying to time the market. Okay? And when you get good opportunities to buy the dip, you go ahead and do so. Any dollar cost average, you just have to look at it. Okay, I'm getting a different price today than where it was at 2 weeks ago. I'm getting a cheaper price, so I'm getting more shares at a cheaper discount. Okay, I'll take that up. You got a good quality company. I don't see how you can go wrong with that. You know what I mean? So it's time for us to start owning some asset, start owning some of these stuff, and we need to just let our money work for us, and we need to just stay resilient and get a long term, stay focused, and you definitely be all right. Educate yourself as well, and I hope you guys enjoy this video. I hope you guys like, and I hope you guys subscribe, and I hope you guys enjoy the content and you see what we provide. And I hope you guys learned something about the market today and see the direction of the market and see what's going on and give your opinion as well, and let me know what you think. What's your opinion as well? Let me know what you think, where the market might be going, or what's your opinion on the economy and what you think might happen, or what you think is going on, and how you feel, and what's your perspective, and what's the stocks you're getting into, and what you're interested in as well, that you want to see us cover on this market. So smash the like button up, subscribe once again, and take care, folks, and I'll see you guys in the next one.